Welcome back, and you're watching Market Fatafat on ET Now. Let's keep it going with all the stocks that are buzzing in trade, either on the back of news flows or on the technical front. And on the technicals, we're joined by Kunal Rambhia joining in with us right now. Kunal, a very good afternoon to you, and thank you so much for joining in with us on ET Now as always. First stock you've picked out for us is HAL. This space has been buzzing in the for a while now. Last 6 months, we've seen 45% return. What are the charts now indicating for HAL?
Very good afternoon to everyone. So if you look at HAL, the overall performance in the last 15 days was quite muted, and this counter is more on the consolidation side. But if I look at the strong support, which is coming near to 37.75 to 3800, presently it's trading at 3804. It's offering the best risk reward ratio with the stop loss of around 25 to 30 points. One can initiate a long, and the targets can be 3900 to 3950 in very short span of time.
All right, so moving on then, let's put this, actually stay put with the defense names, and Garden Reach is the counter, Harsh, that you're going to talk about. Last week was a spectacular week for these defense players. Garden Reach, why is it in focus today?
Well, yes, because, there have been reports which suggest that HDFC AMC, which is the mutual fund arm of HDFC, and some of its schemes have started to offload some stake in Garden Reach. Now, it's very interesting the way in which HDFC has gone about Garden Reach. It held over 8%, all the schemes combined held over 8% in Garden Reach in September of 2020. And currently, that number is just above 5% is what we understand. It was at 6% on the 30th of June. It's come down. So what we've seen is that there has been some stake sale with regard to Garden Reach that has happened from HDFC AMC side. And what you can therefore start to see is that some amount of profit booking happening, at least from HDFC AMC. Of course, the stock itself, unperturbed by that news in trade today, it fell briefly at the start, as you can see, but after that it's recovered very, very well. It's up 1.7%, and it's, of course, as Cheryl did mention, given a very solid 27% return over the last 1 month or so, or a large chunk of that being in the last 12 days or so. So very solid numbers overall from Garden Reach, but nonetheless, this is the news that's really keeping it in buzz.
All right, that's the reason why Garden Reach is in focus in today's trading session. Let's move on. Let's talk about Bharat Forge, and that one has hit a record high levels in today's trading session. They informed the exchanges that their unit Kalyani Strategic Systems has bagged 2 exports order, which was worth about 890 odd crore rupees or 850 odd crore rupees, and this for supply of components and armored vehicle chassis over a period of 18 months. However, the company did not specify which nations it received the orders from, but the deal is subject to necessary government approvals. This is what Bharat Forge mentioned in their filing. At one point in time, the stock was trading higher than about 2%. Right now, as you can see, the stock is trading higher by about 1%, and that is Bharat Forge that's in focus in today's trading session. But yes, there's a big exclusive interview lined up for you in this week with Bharat Forge management on our ET Now special show. That's ET Now on the Go Pune edition.
If there is a billboard which has just one mantra which you believe in, what would that billboard be?
I have one poster in my room that says, "What if everyone's wrong and you're right?" That don't follow the herd. But everybody follows what is easy to do. What is difficult to do is what makes you successful. Developing technology on your own. Spending 12 years in developing your own products when nobody gave you a chance. That is what makes you different. That is what makes you unique. That is what makes you a champion.
An exciting interview that you should watch out for on ET Now this week. But let's move on and talk about the next stock that is in focus, and that is Data Patterns. This one is buzzing in trade after it met with Incred, and now Incred has come out with a note on the management meet that they had. They're saying that, the company is highlighted in terms of to increase their total addressable market by increasing the product portfolio, and they're actively pursuing in terms of various prospects in terms of contracts for over rupees 2,000 to 3,000 crores over the next 3 to 4 years. The company is aiming at a top line growth of around 30% consistently, with a healthy margin of 35 to 40%, and also in terms of utilizing the rupees 500 crore raised in QIP in December 2022 for the product development. So that is the focus area as well. Company said that they are to to more than double their manufacturing space and infrastructure, and no plans for any further fundraise in the near term is what the company is highlighting. On the back of that, we've seen the company has hit a record high on the intraday level as well. As of now, trading with gains of almost 6%.
All right, moving on, let's talk about Repro India, and this particular counter is in focus in today's trading session. Even last week this one was in focus, but today if you look at the stock price, it has seen an uptick of as much of above 5%, its steepest jump since August 11th, and it is locked in the upper circle of 5%. Morgan Stanley Asia on Friday bought about 1.64 lakh shares of the company, amounting to a 1.24% stake at a price of around 800 rupees per share. On back of this particular development, as you can see on your screen, Repro India locked in the upper circle of about 5%, as we know.
Okay, let's move on and talk about the next stock on technicals. And Kunal, Wipro is the stock that you've picked out for us. What are the charts now indicating for Wipro at 416? Would it still be a buy call?
So yes, if we look at the recent formation, it's on the chart. It looks like the flag formation and the consolidation is right from 8th of August so far, which is forming a sideways channel. So yes, if today's high is taken out, that's around 418. One can initiate a buy only above 418 with the stop loss of 413. I think now it's on that breakout, it can show us the new 52 weeks high, and the targets can be as high as 430 to 435.
All right, that is Wipro for you. Moving on, Linde India, that particular counter is in focus in today's trading session. If you look at the stock, it was trading higher by approximately 3% or so last time I checked, holding on to those gains. That is Linde India for you. The company has reported positive outlook on demand and profitability in its AGM, which was held on August 17. The company expects a 9% annual growth in industrial gases market due to its expansion in the steel sector. They're seeing rising demand for ammonia, nitrous oxide as from the auto sector. You have Haitong International, which is a brokerage firm which has come out with a note on Linde India, where they've reiterated outperform stance, the citing scope for sustained revenue growth and profitability. Remember, they said that Linde has posted 57% surge in revenue within the specialty gases category, with management anticipating further surge in demand. So that's why Haitong is actually positive, and as you can see, the stock is actually buzzing in trade post that positive commentary coming out from the AGM.
Okay, let's move on to the next stock. And Ankita, you've picked up ONGC for us. What's the news flow here and why is it in focus today?
That's correct, Winnie. ONGC is on our radar. That's because ONGC Videsh, the overseas investment unit of ONGC, has secured an extension of 3 years to explore the hydrocarbon in South China's Sea Block 128. Now, this is the 8th extension for the company and is valid till the 15th of June 2026. Now, ONGC Videsh holds 100% operating stake in exploration block 128 with a cumulative investment of more than $50 million. And on the back of that, ONGC will be in focus today.
All right, that is ONGC for you. But Kunal, let's talk about latent view and how is this one looking to you on the charts? I think this is the first time you're talking about the stock, isn't it?
No, so earlier we had discussed about latent view near 385 when it was doing the first breakout, and since then this counter has made a clear higher top higher bottom formation, and right now it's trading at 438. One can keep accumulating this counter. The positional stop loss on this will be 415, and the targets now, because it's near to those 52 weeks high and it's making a new high, the targets can be as high as 500 from the present level. So keep accumulating, stop loss being 415 and the targets being 500 levels.
Okay, targets being at 500 levels for latent view, so keeping an eye out on that one. But let's move on, talk about INDO Industries. And Harsh, this one has been buzzing in the trade for the last couple of sessions. But today, what is the specific news for you?
Well, yes, there's an ICICI Direct, very interesting note coming through from ICICI Direct on INDO. What they believe is that there are lots of levers for positivity with regard to its outlook going forward. What they're suggesting is that most of the negatives are behind. Of course, FY23 was a tough year, even globally, from an export perspective for INDO. However, despite a 32% contraction in Indian exports abroad, we did see that INDO was able to maintain its volumes, which was the positive which they take out of the FY23 numbers. They believe that they were also able to maintain their healthy EBITDA margin, and therefore, in a year which is FY24, and FY25 over the next year or so, they expect INDO to better the performance given that there will be a more positive tailwind for the business. They are actually valuing INDO at $295 a piece. That's the target price they've given out, which is a 13 times FY25 expected EPS. multiple is what they've given to INDO count, and on the back of that you can see stock up 4%.
All right, moving on, let's talk about NMDC Steel, and that particular counter is gaining for a second consecutive session. It has also is trading higher by approximately 12% last time I checked, and also it's hit a record high level in today's trading session. 11% uptick. That's NMDC Steel for you. The company's 3 million ton green field steel plant at Nagarnar at Chhattisgarh will be fully commissioned within a week. That's the word coming in from the chairman and managing director of the company. NMDC Steel is a demerged entity of NMDC and owns a 3 million ton steel plant. And the company official also said that NMDC Steel has commenced blast furnace and trial production and the trial production is already in process. The full-scale production at the plant will take place around October to March, and it is expected to produce 1 million ton steel during the period. This is what NMDC Steel's official had to tell, and on back of that, the stock is soaring in trade, 11% uptick, because even the fact that if you had the steel plant actually come into stream, you'll also have the divestment of NMDC also take place. So a lot of factors aiding this particular move in NMDC Steel today.
Okay, surely keeping an eye out on that one. Let's move on, talk about BHEL, and this one is in focus on the back of an order win that is there. They've received an order worth around 4,000 crores from Adani Power's wholly owned subsidiary Mahan Energen Limited for a power project in Madhya Pradesh. Now, BHEL is engaged in the supply of equipments like boiler, turbine generation, and supervision erection of and commissioning of a 2 into 800 megawatt of power projects for the company located in Madhya Pradesh. The order will be executed in 31 to 35 months. On the back of that, we have seen the BHEL in focus today up almost 1% in trade.
All right, that's BHEL for you. But Kunal, let's talk about IEX. Do you think that this one will regain its mojo, at least on the charts now?
So yeah, again, it's a perfect bargain buying opportunity, and in today's trading session, in fact, it's making a doji after a decisive recent decline. So the conditional call goes this way, that if it crosses the day's high, that's 125.20, one can definitely initiate a buy on that. Stop loss will be 122, and then the first target can be 132, second can be 135. We'll keep revising this target as the rally begins, but the conditional buy will only be above 125.50, which is the today's high itself.
All right, let's shift focus. Let's talk about the entire Murugappa group. All of those counters were actually trading higher in trade today, and because the members of the founding family agreed to settle pending dispute. The dispute was between the family branch of late M.V. Murugappan and other family members, has now been settled, and the terms of the agreement are confidential, and the parties have agreed that all legal proceedings will be withdrawn. This is as per the statement by the entire group. So on back of this, you have Carborundum Universal that gained as much as 5.6% earlier in the day. It was the most since August 1st. Now it's given up some of those gains. It is gaining for a second consecutive session. You had Cholamandalam Investment, Shanti Gears, Wind India, Tube Investment, all of them seeing gains of as much as 3% earlier. They've paired some of those gains. Even EID Parry, for the matter of fact, that one also traded higher by about 2.8% earlier. So all of the Murugappa Group companies were in focus on back of the dispute that was settled between the family branches.
Okay, keeping an eye out on that and all the stocks that actually get covered in the Murugappa Group. But let's move on, talk about another IT name, Kunal, that you've picked out for us as emphasis. Similar charts to Wipro. What is it that you're indicating now here?
So Emphasis is actually one of the best picks for us also, and the only reason being it's actually outperforming the entire segment. And if you check the formation, it's clearly making higher top, higher bottom formation since 1790. It's on the verge of a new breakout, so one can start accumulating at the present level itself. Positional stop loss on this can be 2300, and the targets can now be set as 2650 to 2700. Minded, just it's a positional target, so one should not be considering a weekly target or something. It can be for next 15 to 20 days.
All right, that's emphasis for you. But Ankita, let's talk about PNB Housing Finance, and this particular counter is on fire today.
That's correct, Cheryl. It is on fire today. It is up almost 4% in trade. Now, that is on the back of the fact that they have successfully resolved and fully recovered its large corporate non-performing account of 784 crores, which is 1.3% of the loan asset on the 30th of June 2023. So the large part of NPA account has been resolved via the ARC sale. And on the back of that, the stock is on fire. It's up almost 4% in trade.
Okay, let's move on, and moving on to the next stock that we're going to talk about. And Kunal, you've picked out NALCO for us. What is it that is, are you positive on NALCO? Is it still a buy call for you? What is the view on this one?
Absolutely. So the first breakout on this counter was on 14th July, and that breakout was at 86.5. From there, we saw this very recent rally on the counter, which went up to almost 98, and it's now regained that breakout zone, which we call in technical as the retesting of the breakout zone. It's at 88. One can definitely accumulate this counter at the present level. Stop loss can be 85. And from here, again, the positive rally may just continue. So it's a bargain buying opportunity, and one can initiate a buy with the positional target of 98 to 100 levels.
All right, positional target of 98 to 100 rupees per share on NALCO is what Kunal has to say is bargain buying, is what he's terming it as. But Harsh, HDFC Bank, why is this in the spotlight?
Well, yes, so agencies have reported that HDFC Bank is keen on tapping into consumer finance, and that's largely the strategy largely is that they're going to tap into home loans and thereby tap into consumer finance as well through that home loan route. So they're going to largely try and push consumer finance loans for TVs, refrigerators and the like as consumers start to take home loans itself. So home loans is going to be the primary product through which consumer finance loans are going to be pushed. That's what agencies tell us that HDFC Bank have told them. Largely, HDFC Limited had around 530 offices through which they would distribute their loans. Now, those are getting converted to HDFC Bank as well. And along with it, what HDFC Bank has also suggested is that the number of branches distributing home loans has gone up by 3 times since the merger. That obviously means that there will be more home loans being pushed out as well. Of course, a safer basket of loans is a positive for HDFC Bank as well. And that's largely the news that's keeping HDFC Bank in focus. Stock absolutely flat on the back of that, but nonetheless positive.
Let's move on and talk about Capri Global. Why is that one in focus today? Because FTSE has actually announced changes that affect inclusion, deletions from their all cap as well as all world indices as well. And the adjustments are going to start taking place on September 15, 2023. Now, in terms of additions, when you look at it, we are seeing an addition that has come in for Capri Global in the addition to the all cap fund. And that is why Capri Global is buzzing in trade today. We'll be seeing an inflows for Capri Global of around $8 million, as well as when you look at it, the flows, which is the average daily volumes, that's going to be at 4.9 times as well. So let's keep an eye out on Capri Global today, buzzing in trade, trading with gains of more than 3% as of now.
All right, that's Capri Global for you. But India is set to introduce Bharat's new car assessment program, also called as Bharat and CAP. And the norms are set to be launched tomorrow and are aimed at improving road safety standards of motor vehicles weighing up to 3.5 tons. My colleague Sumit Chaturvedi is here to tell us exactly what does this mean and how crucial it is for you and me as well. Sumit, over to you.
It is going to be a landmark moment after India gets its own car crash safety norms. Bharat and CAP will be introduced tomorrow by Road Transport Minister Mr. Gadkari. India will be competing with a host of nations including US, South Korea, Japan and China that are using their own car crash safety norms. Many Indian companies are using NCAP car crash test results so far. It will happen like this, that the cars that are manufactured here or that are imported here can be submitted for these car crash tests, and then 0 to 5 ratings will be given. These ratings, the star ratings, can be marketed by the manufacturers to promote their safety of the cars. In general, it will uplift the safety standards of vehicles in India as well. That's going to happen. That's going to bring safety, because safety, road safety is an important issue here. The cars will be up to 3,500 kgs or 3.5 tons. It will include MPV, SUV and all other types of four-wheelers. For electric vehicles, it will be separate car crash tests that will be done and that will be given the safety rating. The safety rating will happen in terms of the frontal collision, the side and the pole beam. So these are all will be included there. India will be included in the list of nations that are having its own car crash safety norms. In general, the benefit is going to be given to consumers because they will have their own assessment as to which car is more safer, which car is not safe. That is important. Recently, we have seen the safety debate has taken center stage because of a host of accidents that have taken place on Indian roads, and that's why there was a necessity which was being felt. However, currently it's going to be voluntary in nature. Sometimes organizations can also pick cars from showrooms or manufacturers themselves and can submit report, but it's going to be mainly voluntary in nature so far. But as important development, we can say that an important development in the direction when India is going to have its own safety standards as far as cars are concerned.
Okay, thank you so much for that. But with that, we're absolutely out of time on this edition of Market Fatafat on ET Now. Thank you so much, Kunal, Samit, Harsh, as well as Ankita for joining in with us. And it's a goodbye from Sharon, myself, as well as the team who put this show together. Don't go anywhere. Closing trades will take the action forward.